during the financial year. A few other changes are being made, the details of which are there in the finance bill. Indirect taxes. So remarkable progress in GST. GST has been a landmark reform of independent India, showcasing the spirit of cooperative federalism. While aspirations were high, there were huge challenges too. These challenges were overcome deftly and painstakingly under the guidance and the oversight of the GST Council. We can now take pride in a fully IT-driven and progressive GST regime that has fulfilled the cherished dream of India as one market, one tax. There are still some challenges remaining, and we aspire to meet them in the coming year. The right balance between facilitation and enforcement has engendered significantly better compliance, and enforcement has engendered better compliance. GST revenues are buoyant despite the pandemic. I would bring in something which I've got to know this morning, not part of my speech, but worth putting in here for the knowledge of the Honourable House. I would like to bring to the notice of this House that the gross GST collections for the month of January 22 are rupees 1,40,986 crores, which is the highest since the inception of GST. This has been possible due to rapid economic growth, recovery, post-COVID, This has been possible due to the rapid economic recovery post-COVID, as well as various policy and administration undertaken by central and state tax administrations. Taxpayers deserve applause for this growth. Not only did they adapt to the changes, but enthusiastically contributed to the cost of paying taxes. Special economic zones. In part A of my speech, I have referred to the proposed reforms in SEZs. Alongside, we will also undertake reforms in customs administration of SEZs, and it shall henceforth be fully IT-driven and function on the customs national portal with a focus on higher facilitation and with only risk-based checks. This will ease doing business by SEZ units considerably. This reform shall be implemented by 30th September 2022. Customs reforms and duty rate changes. Customs administration has reinvented itself over the years through liberalized procedures and infusion of technology. Faceless customs has been fully established. During COVID-19 pandemic, customs formation have done exceptional frontline work against all odds, displaying agility and purpose. Customs reforms have played a very vital role in domestic capacity creation, providing level playing field to our MSMEs, easing the raw material supply side constraints, enhancing ease of doing business, and being an enabler to other policy initiatives such as PLI and phased manufacturing plans. My proposal on customs side are aligned to these objectives. Project imports and capital goods. National Capital Goods Policy 2016 aims at doubling the production of capital goods by 2025. This would create an employment opportunities and result in increased economic activity. However, several duty exemptions, even extending to over 3 decades, in some cases have been granted to capital goods for various sectors like power, fertilizer, textiles, leather footwear, food processing, and fertilizers. These exemptions have hindered the growth of the domestic capital goods sector. Similarly, project import duty concessions have also deprived the local producers of a level playing field in areas like coal mining projects, power generation, transmission or distribution projects, railway and metro projects. Our experience suggests that reasonable tariffs are conducive to the growth of domestic industry and make in India without significantly impacting the cost of essential imports. Accordingly, Honourable Speaker, Sir, it is proposed to phase out the concessional rates in capital goods and project imports gradually and apply a moderate tariff of 7.5%. Certain exemptions for advanced machineries that are not manufactured within the country shall continue. A few exemptions are being introduced on inputs like specialized castings, ball screw, and linear motion guide to encourage domestic manufacturing of capital goods. In the last two budgets, we have rationalized several customs exemptions. We have once again carried out an extensive consultation, including by crowdsourcing. As a result of these consultations, more than 350 exemption entries are proposed to be gradually phased out. These include exemptions on certain agricultural produce, chemicals, fabrics, medical devices and drugs, and medicines for which sufficient domestic capacity exists. Further, as a simplification measure, several concessional rates are being incorporated in the customs tariff schedule itself instead of prescribing them through various notifications. This comprehensive review will simplify the customs rate and tariff structure, particularly for sectors like chemicals, textiles, and metals, and minimize disputes. Removal of exemption on items which are or can be manufactured in India and providing concessional duties on raw material that go into manufacturing of intermediate products will go many a step forward in achieving our objective of Make in India and Atmanirbhar Bharat. I shall now take up specific sector-specific proposals. Electronics. Electronic manufacturing has been growing rapidly. Customs duty rates are being calibrated to provide a graded rate structure to facilitate domestic manufacturing of wearable devices, hearable devices, and electronic smart meters. Duty concessions are being given to parts of transformer of mobile phone chargers and camera lens of mobile camera module and certain other such items. This will enable domestic manufacturing of high-growth electronic items. Gems and jewelry. To give a boost to the gems and jewelry sector, customs duty on cut and polished diamonds and gemstones is being reduced to 5%. Simply sawn diamond would attract nil customs duty. To facilitate export of jewelry through e-commerce, a simplified regulatory framework shall be implemented by June this year. To disincentivize import of undervalued imitation jewelry, the customs duty on imitation jewelry is being prescribed in a manner that a duty of at least 400 rupees per kg is paid on its import. Chemicals. Customs duty on certain critical chemicals, namely methanol, acetic acid, and heavy feedstocks for petroleum refining are being reduced, while duty is being raised on sodium cyanide, for which adequate capacity in the domestic arena exists. These changes will help in enhancing domestic value addition. MSMEs. Duty on umbrellas is being raised to 20%. Exemption to parts of umbrellas is being withdrawn. Exemption is also being rationalized on implements and tools for agricultural sector which are manufactured in India. Customs duty exemption given to steel scrap last year is being extended for another year to provide relief to MSME secondary steel producers. Certain anti-dumping and CVD on stainless steel and coated steel flat products, bars of alloy steel and high-speed steel are being revoked in larger public interest considering prevailing high prices of metals. To incentivize exports, exemptions are being provided on items such as embellishment, trimmings, fasteners, buttons, zipper, lining material, specified leather, furniture fittings, and packaging boxes that may be needed by bona fide exporters of handicrafts, textiles, leather garments, leather footwear, and other goods. Honourable Speaker, sir, duty is being reduced on certain inputs required for shrimp aquaculture so as to promote its exports. Tariff measure to encourage blending of fuel. Blending of fuel is a priority for this government. To encourage the efforts for blending of fuel, unblended fuel shall attract an additional differential excise duty of ₹2 per litre from first day of October 22. A few other changes are being made in duty rates, customs, tariff and customs law, the details of which are there in the finance bill. Mr. Speaker, sir, with these words, I commend the budget to this august House. Thank you.
Item number 2, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management FRBM Act 2003, Medium-Term Fiscal Policy cum Fiscal Policy Strategy Statement and Macroeconomic Framework Statement.
Item number 3, Vitt Vidhek 2020, Nirmala Sitharaman ji.
Sir, item number 3, Finance Bill. Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2022.